With a technology like DLT or blockchain, the instantaneous nature of replicating information across multiple ledgers rather than depending on a single source of truth was a bit of an aha moment, and that changes the dynamic in the market pretty quickly. My name is Waqar Chaudry. I work for Standard Chartered Bank in Financing and Securities Services, and I look after the product rollout and strategy for digital assets. At a group level, for us, digital assets are here to stay. They are going to be part of the ecosystem that we call traditional finance going forward over the next number of years, and then they will become mainstream. The kind of digital assets where we're looking at are cryptocurrencies, we're looking at tokenized securities or tokenized assets, we're looking at native issuance on-chain, and we're looking at infrastructures that will eventually move away from traditional based systems into blockchain or DLT-based systems. We want to be a part of the ecosystem across the spectrum on all those areas. For now, the key drivers for us are to meet client demand, which stems from the requirement to safe keep assets and process assets in a manner that allows them to transact safely, keep the assets with a custodian that can safe keep those for an extended period of time and allow for seamless transactions from one blockchain to the next. The obvious ones are the benefits of potential liquidity in the market. So assets that have never seen the light of day, they will be more liquid and more visible to the assets investors, and those who are looking for assets that diversify our portfolio in a wealth portfolio or otherwise a trading portfolio. So where those assets have never been traded openly in an open market, they will benefit. Secondly, on a more operational level, where we see a T+1 or T+0 settlement cycle where you have instantaneous settlements where you don't need to worry about overnight cash and moving off collateral, we see benefits there as well. And finally, of course, as the new technology takes hold and there are large programs in our clearinghouses and exchanges where they need to move to the latest and greatest for the next decade, 2 decades, 3 decades, a tokenized security would become mainstay. That's the multiple sort of areas we're looking at now. Which one comes first, second, third? We will find out in the next few years. By conversing with our clients, we've had a joint aha moment that actually that particular asset that you've never been able to put onto a secondary market could potentially gain visibility. The valuation of the portfolio could be much more accurate based on that. And assets that have never been on the market where people can diversify their portfolios could potentially allow for that. For Standard Chartered Bank, given the way we operate in far-flung markets all over the world, the incremental benefit of blockchain technology is far beyond mature markets in North America and Europe, where a T+3 market may become T+0 and cost savings will be immense. At this stage, there's a lot of experimentation going on. Some organizations have decided to adapt the technology for tokenized bonds. Some have tried on securities. But majority of these experiments are in a closed ecosystem. That's the observation across the industry. When it comes to tokenization of securities and other assets, what we really want to see today is an active dialogue where common standards are adapted across multiple parts of the industry, which includes custodians, brokerages, clearinghouses, CCP, which is connected to a CSD or a securities depository, and of course with that a secondary market. The primary issuance market is active. We've seen multiple issuances. It is happening all over the world. It's quite encouraging. Now we need to get to the next stage where we think that the real promise can be met by enabling secondary markets to come online. We think that that's the tipping point, that it'll actually make it quite widespread and mainstream. The biggest challenges are coming from clarity around regulation, although that is not an impediment per se. It's just that we have treatment across multiple jurisdictions that are looking at digital assets in completely different lenses. We have a broad range of blockchains that we're looking at. Even to the extent that we've done tokenization, we've done upwards of 3, 4, 5, 6 different chains across the bank using different products. And that is exactly the same as any other organization. No one's been able to pick a winner. At this stage, interoperability is something that is becoming a hot topic for us to start to look at. How do we harmonize the communication between one ecosystem to the next? If the asset is ubiquitous from one market to the next, how do we transport that? Those conversations have started. Suffice to say that there's a lot of providers out there who are looking at the technology, how they can integrate one blockchain with the next without needing a third party to come in, or possibly a third party coming in and providing the interoperable layer. The capability to bring together multiple blockchains and allow for assets to move from one chain to the next is going to be quite important, given the plethora of technologies available out there. And secondly, providing a robust ecosystem where tried and tested systems are connected to Chainlink, for example. Institutional grade technology sitting behind Chainlink would be immensely useful to organizations like us going into the future. It is going to change the makeup of how we interact with our clients and what kind of information they need and how fast do they need it. It'll also disrupt to the extent that it can disrupt the movement of money between one function to the next across treasury, across trading desks, across custodians, and into the exchanges and trading desks beyond what we can imagine today. So these are some of the things we see that they will start a snowball effect once one economy starts to adapt, and the interconnected nature of global finance will mean that others have to keep up. For us, what's important is that our clients talk to us at all times if they're thinking of adoption of such technologies, to find out what solutions we have in place today, what are we looking at into the future, and as and when we start to adopt technologies and products that are on-chain, we will bring our clients along the journey, whether it's Africa, Middle East, Asia, or in other parts of the much more developed economies. My personal insight to date is primarily to do with how we have to navigate the spaghetti of systems, policies and procedures, not just within our organization, but our partners and clients. I constantly look out for ease of use and ease of adoption of technology across the business whenever I talk to my peers, my clients, to make sure that we don't really have a seismic shift from what we do today to where we want to be. It's an incremental steps. So to that extent, the key for us is to make sure we incrementally build a product rather than a wholesale change.